In this video, I want to show you crude oil strategy with code and show you the exact code to use to turn off a strategy after a drawdown and why this is a problem and what the money management algorithms can do for you. And so take a look at equity curve stop loss strategy here. Basic code right here is if the time is greater than start time and less than the finish time, then we sell short the next bar at the highest high of the last 12 on a limit. And so the past hour of 5-minute bars, we're shorting it. And we have a $500 stop loss. We exit at 15:30, 3:30 p.m. Eastern Standard Time. And we take trades between 9 and 3. And so it's very general. This code up here tells us it measures the equity peak and the total P&L and where the drawdown is. And you see right now, this code right here, we're going to take the comments off and say if the equity peak minus the total P&L is less than the loss of 5,000, then begin. So if we're not at a $5,000 drawdown, then we trade this. Once we get in a $5,000 drawdown, we stop. But the problem with this is, how do you start again? You could start again on a new time period, on a new month, a new year. But here is what this strategy looks like with this setup. It stops trading in 2014. So if you had a strategy that stopped trading because of a drawdown and you programmed it to turn off in a drawdown, it would not continue to generate the equity curve so that you could watch it to see if it performs again. And so this is just a code example. So what we're going to do is we're going to turn this off. We're going to turn the stop loss for the strategy off. And so we're going to comment this out so it won't stop. It'll just continue to generate the equity curve regardless. And so then we'll see the results. And this is what you might miss if this will update in a minute. This is what you will miss if you have this code turned off. And so still not a great strategy. No one really wants to trade this, but you would probably would like to trade during this time period. Trade during this time period. Is there a way to catch these positive sloping equity curves? And with the money management algorithms, if we continue to generate this equity curve, we don't shut the strategy off in its native strategy, we can look at it with the money management algorithm. That's exactly what we have over here on the right. And I click on this strategy on the right, and I've used 4 different rules. You see the entry code is just a short at the highest high of the last 12, basic stop loss, basic intraday time frame, basic exit. So really only one entry rule, but we do have 4 algos. We have rule 1, rule 12, rule 10, and 11. So this is what can be done. $60 average trade profit and $5,600 drawdown. So a decent strategy, short only strategy in crude oil for the last 7 years. And so you see the results of this. What about the long side? I tested this, developed this algorithm on the short side first as an example. Could I take a really simple strategy and apply this and get anything out of it? And yes, I did get something out of it with the money management algorithm. So what if I make it a long only strategy? This is a 2-part video really. I'm showing you the problem with having an equity stop loss within your native strategy. You want to keep that out and then use these stop losses or money management algorithms techniques in the money management algorithm and another strategy. So here is what the long only side looks like. So if we buy the lowest low of the last 12 bars, $500 stop loss, exit at 1530 and enter between 9 and 1500, this is what you get. And so we don't use the strategy stop loss. We've commented that out. But can we get positive performance on the long side too? And so here is still the performance for the short side. We have to turn the strategy status off and then on. And I'm going to do that, and you can see the results for the long side. So you see the results for the long side. It's not a great strategy, but we take something that looks like this and turn it into something positive. $44 average trade profit, and since 2016, actually a pretty nice equity curve. And so I love to be able to take a simple strategy and find a way to trade it with the equity curves, because the strategy, you saw it, it's not optimized at all. I just threw down by the next part, the lowest low of the last 12, or short the highest high of the last 12. And that's it. And it's real basic. And so the same money management algorithm rule works well on the long side, well on the short side. And so this is really a 2-part video. I wanted to show you the problem with adding strategy stop loss code to your strategy, you stop and then you don't know when to start again. So it's not pure to add it, because if you start it on a new month, it could be doing poorly. And so it's just based on a random decision to start again on the new month if you're down by a certain amount on the current month, rather than to wait and monitor the strategy. So the money management algorithms monitor the strategy, and they overcome the problem related to equity curve rules within your native original strategy.